Hi there, traders. This is Brad Gilbert with the FX Market Insight for Friday, the 24th of May. All right, now just coming to the MyFX Trading Hub, this is a good day to really give you a bit of insight into what is actually going on because, you know, if you look at the general media pages, right, I'll just switch you over there, you can get fooled by what is actually going through. Now, dollar retreats on rising expectation of a rate cut. Now, give me a break. There was a couple of second or third tier numbers out yesterday. They were a little bit weaker than expected. They do not determine the interest rate. So this is the media, right? You got to understand what they're based on. They're trying to sell advertising. They're trying to sell stories. Usually it's all, you know, the louder the noise, the better. So you've got Trump trying to offset some of the some stuff. That's fair enough. US home sales manufacturing stumble. Okay. As I said, this isn't interest rate changing data. So just be careful with what you read. Okay, now, then you've got all the other, the whole news page itself is built up around geopolitical news. Okay, sterling slips as pressure mounts on PMA to step down. You've got oil whipping around the place. That's a fair story to sort of comment on. And the other one is obviously, that isn't here at the moment, is the European parliamentary elections. So what we're seeing, actually, if I just bring you over to the charts just to make a bit more sense, at the moment, you've got, you know, to me, it's business as usual, right? Aussie and Kiwi are the two pairs who have been dominating the sort of trend scene. Now, they are sort of trading sideways and sort of just whipping about. You know, they are caught up very closely, obviously, with the US-China trade issue. They are coming back towards short-term, when I say short-term, hourly trend lines. Now, if these break, don't think they're going up far. These things are fundamentally going down. But they are set up for potentially a bit of a tweak to the top side. You know, the old saying in the banks was Friday, square up day. So we may see a bit of a square up before the weekend. I mean, that's where Trump's doing most of his yelling and screaming about China. So you've got a couple of things happening here. See, obviously, dollar yen is lower. It loved the slightly weaker US numbers. So that's moving lower, to me, predominantly by US weakness. Okay, there is a little bit of the China thing in there, but you know what? This isn't the safe haven trade just at the moment. It's only dropped 50 points. You look at euro. Now, a couple of things in play. Now, the market, me included, all bared up with potential negativity coming from the European parliamentary elections. Now, the whole market's short. Then all of a sudden, you get some weak US numbers, and you can see the range contracting there. The way that the resistance and support were contracting. It's popped to the top side and taken out stops around 111.81. Now, the real level to get short in euro is up around 112.20. So I don't think that's going up anytime soon. To me, it's in a big sideways move. Sterling, well, has been drifting lower all week or the last week or so, just on negative Brexit updates. Now, we're dealing with, you know, potential referendums. Like there's a whole lot of stuff going on in Parliament. Now, the politicians are bad news for the trading markets. So to me, sterling is way off the trading radar at this point. Now check out dollar CAD. Big mover here is oil. Okay, that's the green bars here. Now that price is inverted, so that's falling. But I've got it inverted so it matches up visually with CAD because they have such a close relationship. And since the CAD is quoted as dollar CAD, I've got to invert the oil. And you can see oil is dominating the direction of dollar CAD, right? We had some pretty strong fundamentals the other day, and that's just been brushed. So once again, that's a little bit hard there. So when you come back to the MyFX Trading Hub, and this is where we sort of put it all together, you can start to get a bit of a feel of what's going on. So we've got normal liquidity, okay, slight US dollar weakness. The core market drivers are still the US-China trade issue, which is sort of gone to bed a little bit. We've got Brexit, which is now sort of coming back into the news wires. Now, what have we got on the majors? Well, the US dollar was very close to breaking daily resistance yesterday. Now, it's just drifted back into the range. It's nothing big in my eyes. The one change from yesterday is really the dollar Swiss, okay? It's sort of, you know, it's the old, or euros rallied higher back into the range, and that's pushed dollar Swiss lower. Funnily enough, dollar yen, it has broken down on the hourlies, obviously, but on the dailies, it's not quite there yet. It's got to drop down through sort of 109, sort of 2030 level, for my opinion, before it heads into a downtrend. So we'll see how the dollar plays out. But I think this is a really short term, just a flush out of positions. These two puppies here, which have been giving a lot lately, match up with their fundamental outlook, and that's why they've been the best trading pairs. Now, when you look at the potential opportunities coming up, okay, it's really coming back to, let me just clear the screen. Now, we're looking at the upcoming events. Now, we do have a couple of things coming out. Well, the trade balance data for the Kiwi is that out? It should be out. But don't worry about these two releases. They're not going to have much impact, right? So, like inflation, any of the numbers in Japan, whilst there's other things happening in the world, are not going to have any impact. I'm telling you that after like 30 years of experience, that's what's going to happen. So don't get excited that you got CPI numbers out of Japan. This is a big one. Well, it is for everyone else, but not for Japan. So don't worry about that. The trade balance will just drive straight through that. Now, we're coming into Friday trading. As I said, it can get a little bit loose. UK retail sales, well, the geopolitical situation in the UK could not be more calamitous at the moment. So don't get yourself all excited about a big move on sterling on the fundamentals, because at the moment it is dominated by just random garbage. But we do have a good number. Now, this is a bit more of an historical number. Usually it would be a red high impacting release. I've just put it as blue so you can trade through it. But you know what? If there's significant variance in the durable goods, this is a sort of closer to a top tier number that can give the dollar direction. If this number is strong, it's just going to correct the knee-jerk moves we've seen over the last 24 hours, and everything will be back to exactly where it was the day before. If it's weak, well, now we're starting to get into some numbers that, you know, potentially can add some spice to the whole rate talk or rate cut talk. But you know what? It's CPI. Inflation is the main one. Employment. They're the two key numbers that the market looks at, that where expectations for a change of rates in the US, that's where they would come from, not from housing, like third-tier housing numbers and some oblivious manufacturing numbers. So don't get all caught up on the media. Follow the current trends. And as I said, the current charts, you can see where the geopolitics is coming into the markets here. Break on the downside, break on the top side. So the same thing on here on really dollar yen over the last couple of days, and dollar CAD. These pairs are just getting thrashed about on geopolitics. Funnily enough, the trends in the Aussie and Kiwi are so solid at the moment that they are still within the trends, even though they've bounced back a bit. And this is quite normal for a trending market to come back, retrace to the resistance, and go forward from there. So to me, that's where the best opportunities are. And don't forget, for those traders who haven't seen the updates yet, we have added the analyst picks. This is like a combination of the next best trade. It just gives you a bit more insight into potential opportunities. Now, this Aussie yen one that Mark posted yesterday, a really good opportunity. It was around, I think it was just 75.75 or 75.80 on Aussie yen. It dropped off about 40 or 50 points yesterday. It's just coming back into a selling opportunity. But this is a long-term trading opportunity, right? Bigger stops, bigger targets. Let the damn thing run. Of course, square them up on the weekends. And then you can start to follow where these opportunities are. Now, dollar CAD was poised for an upside move. Well, Mark got it right, but it was actually the wrong fundamental that sort of drove it. But keep an eye on that. And then you've got another long-term trade here in Aussie. Like, to me, Aussie and particularly the Kiwi are two currency pairs that their fundamental backdrop is so weak. You put the US-China issue on top of any other domestic weak data, these things are in all sorts of trouble and have got a long way to go yet. All right? It doesn't happen overnight, but these trades will develop. So make sure you have a look through those, and we'll see how it plays out. All right, guys, that's it from me. Have a great trade day, and have a good weekend if I don't speak to you there. If you've got any questions, jump in the 247 Trade Zone, and have a good one. Cheerio.